Hi everyone, welcome back to another video of Let's Revise by Vidya Duba Academy. In today's video, we will be seeing how or what are the provisions that you have to refer to, or we'll be giving a quick revision and share some of the major keys as how to approach a 7-mark questions when it comes from your income from salary chart. So let me share the screen quickly. Yes. So, what is this 7-mark question that will be from your income from salary? Now, you can broadly classify that into two parts. One is leave encashment. The provisions of leave encashment alone can be tested for a 7-mark question. Second one is gratuity. The gratuity alone can be tested for a 7-mark question in your CMA inter examination. Then you have the pension provisions. You have HRA provisions, then you have this LTA provisions. So these are the major provisions that you will have when in your 7 marks in your income from salary chapter. Now, when we are saying this, we are saying that this provision alone is uh, complicated enough that it will be questioned for a 7 mark. Leave encashment alone will be asked for a 7 marks from your income from salary. Now, what is the other aspect? The next question that can come is the computation of salary. They will be giving you the salary elements of a particular SSC, like you will have your basic, your DA, commission, allowances, perquisites. So you should be aware of the adjustments pertaining to allowances, perquisites, etc. And applying that, you will be arrive at your income from salary. So this is the two category of questions that can come from the chapter income from salary. Now let us look at each of the provisions. First, you have leave encashment. Now, leave encashment and gratuity are more or less similar in certain treatment. How is that? In both cases, leave encashment and gratuity, when you are approaching these topics, the first and foremost thing that you have to see in your question is whether he is a government employee or not. This is the first and foremost thing that you have to see in your question paper. If he is a government employee who is receiving the leave encashment after retirement, please note the term after retirement. If he is receiving it after retirement, then both leave encashment as well as gratuity received after retirement by a government employee is not taxable. Okay, it is totally exempt. Next thing in case of leave encashment is that it may be received during the service. So if it is received during the service, irrespective of the fact whether he is a government or non-government employee, it will be taxable. Now, if he is a non-government employee and he is receiving leave encashment after retirement, then the provisions of section 10, subsection 10AA 2 will be applied for what? To compute the exemptions. To compute the exemption. To compute what portion of the leave encashment received by such an employee after retirement is exempt. So for that purpose, you will have to refer to the provisions of section 10 and section 10, subsection 10AA 2. Next, moving on to the gratuity part. Now, gratuity part, similarly, if it is a government employee, the gratuity received is fully exempt. In case of gratuity, what you have to see is, you have to see if he is a employee covered under the provisions of the Gratuity Act. Okay. If he's a government employee, it is exempt. If he's a non-government employee, the gratuity received after retirement, the thing that you have to see in your question is whether he is covered under the Gratuity Act or not. If he is covered under the Gratuity Act, you will refer to section 10, subsection 10 to check up the exemptions available. And if he is not covered under the Gratuity Act, you will refer to section 10, subsection 10(3) in order to look at the exceptions. Now, there is a term average salary, which you will have to compute in case of both leave encashment as well as gratuity. So, what is this average salary? It is 10 months salary. Which 10 months salary? 10 months preceding the month of retirement. Okay. So please note, this 10 month salary is the 10 month salary preceding the month of retirement. If suppose the SSC is getting retired in November, the 10 month salary will be from up to October. So 10 months up to October, you will have to compute. So it will be from January to October. So that is the 10 months they are referring to. You have to consider that 10 months and arrive at the average salary. Divide it by 10, you will get per month salary. Now, when you are computing this average salary, the another element which will be significant in the formula would be the year of service. Number of years which the employee has given into the organization. Now, this year of service computation is relevant both for leave encashment as well as for gratuity. Now, while computing the year of service, the important point that you have to keep in mind is that you will ignore fractions. Okay, this is very important. While computing the year of service, you will ignore the fractions. If the years of service are given in fractions, you will ignore the fractions. However, in case of gratuity, if an employee is covered under the Gratuity Act, in that case, the years of service warrants for rounding off. Okay, there is something called rounding off that you will have to do if an employee is covered under the Gratuity Act. How will you round off? 6 months, you will ignore. Less than 6 months, you will ignore. And greater than 6 months, you will make it as 1. Okay, so this is how the rounding off has to happen. Now, let us look at some adjustments that will happen in case of pension. So, for pension also, the same concept arrives that is applicable to both leave encashment and gratuity. Pension, if it is commuted, please note the term commuted. Commuted pension received by government employee, it is exempt. Okay. Commuted pension received by government employee is exempt. Now, uncommuted, if it is not commuted, whether it is government or non-government employee, it is taxable. Now, what will happen to a commuted pension received by a non-government employee? In that case, you will have to refer to the formula that is given under the section 10, subsection 10A, 2 to check up the exemptions available. So as per that formula, you will be calculating the exemption. Now, the very tricky question that will happen here is when this leave encashment or gratuity or this pension is received by the legal hire. Now, we will keep the pension of the legal hire aside because pension received by legal hire is nothing but the family pension. Family pension, where is it referred to in the Income Tax Act? It is referred to under the head income from other sources. There it will be taxable in the hands of the legal head. Now, what will happen to the leave encashment or the gratuity that is received by the legal hire? That is after the death of the employee or the SSC. Now, the legal hire is not having an employer-employee relationship um, with the employer. So, what is the taxability provision? The gratuity or the leave encashment received by the legal hire is not taxable, provided the whole thing is not taxable, provided this leave encashment or gratuity is due after the death. Okay, the employee dies on 15th, the leave encashment or gratuity is due on 18th. In that case, the employees, they're not there to receive the amount, it will be received by the legal hire only. So in that case, the whole thing is exempted. It is not to be taxed in the hands of the legal hire. Now you just see the situation where the gratuity is due before the death of the employee. Okay, employee's death is on 15th and the due date is 11. That means the income was due to be received in the hands of the employee. However, since he dies on 15th and 18th they have made the payment is received by the legal hire. Henceforth, this gratuity or the income received will be taxed in the hands of the employee. Okay, so if it is received after the death, if it is due after the death and received by the legal hire, it is exempt. If it is due before the death of the employee and received by the legal hire, it is taxable in the hands of the employee. Please note, it is to be taxed in the hands of the employee and not legal hire. So what is the scenario here? The employee is not there to file your return. So where is the question of taxing him? A legal representative will have to file the return on behalf of the employee. So he will be getting some record like from the corporation or the municipality that he is the legal hire who has to take up the closing affairs of this particular employee, and he will be filing the return on the behalf of the employee. So in that case, the treatment of gratuity would be as if the employee was alive. The same provisions will be applied and it will be taxed in the hands of the employee. Now, the next very significant provision in your Income from Salary Act would be the HRA, house rent allowance. So please note that the house rent allowance can be availed as a deduction only and only if it is forming part of your salary. Only if your employer is giving you HRA in your salary, you will be eligible to avail this exemption or the deductions available under the section. So what is the basic things that you have to note when a question comes from this provision? HRA, the first and foremost thing that you have to see is where is the house? Where is it located? Why is this important? Because if the house is located in a metro like Delhi or Chennai, it is subject to a HRA with exemption of 50%. Otherwise, it is there, the exemption available is only 40%. So where is the house? It's the first thing that you should note in your question. Second one is the rent paid. Now, the rent paid is a very, very significant element. Okay. So the employee should have actually paid the rent. He should be in a rented apartment or he should be paying the rent in order to avail the provisions of HRA or deductions of the HRA. Now, when we say the rent paid in your examination, there may be a question that he is not employed for the first 6 months of the year. The next 6 months of the year, he has got some employment and he's working. So in that case, when you are considering rent, you will be considering the rent only and only for 6 months. Only after the rent that after entering into the employment, whatever rent he is paying, that you will be considering. So before employment, whatever rent he has paid, that is to be ignored. Okay, that cannot be considered in calculating this exemption or deduction of your HRA. Now, again, another scenario will be that he is in Calcutta for some time, then he moves to Bhopal, or then he moves to Trivandrum. So this can happen during in the course of the year. So in that case, the rent that he will be paying will be different in each location. So that part you will have to consider. If he is there in Calcutta for 2 months, so what you will do? The rent paid in Calcutta into two. If he is there in Bhopal for the next 4 months, so it will be the rent paid in Bhopal into two. Okay. So that is how you will have to consider. So in that case, this 50% and 40% part also should be taken into account while you are arriving at this exemption. So you will do this Calcutta calculation separately and Bhopal calculation separately, because here it is 50% and here is this 40%. And once you arrive at the total exemption, what you will do? You will reduce it from your HRA. This will be reduced from HRA. Okay. So this is one thing. Now, what is the next element that you have to take care is the salary part. What is the definition of salary when you are computing your HRA exemption? Salary includes basic plus DA forming part of retirement. This is very, very important. Okay. If they are mentioning DA forming part of retirement is 60% of 20,000 dearness elements, you will consider only that 60% for your calculation. Whether it is pension or leave encashment or HRA, you will consider only and only DA which forms part of retirement. And next is the commission. What kind of commission? Commission which are there in the form of percentage of turnover. If they are saying commission is 10,000 per month fixed commission, that is not to be considered in the definition of salary for the purpose of HRA. Okay, that commission will of course be taxable. It will be forming part of your income from salary, but for arriving at the exemption of HRA, you will not be considering such fixed commission paid. You will be considering only those commission which are expressed as percentage of turnover. Then salary. Salary also, it may so happen that he's getting a salary of 30,000 for the first 4-5 months, and then he's getting promoted, his salary or his basic becomes 50,000. So this variation you have to take into account when you are doing the computation of HRA. So these are the important elements. And wherever such computations are such calculations are involved, I would suggest you to give a proper working note in your examination. Your answer that you have arrived should be supported with proper working note. The next important adjustment that you can expect in your income from salary is motor car. So if there is a question of computation of salary, there will be invariably a provision that will be testing on your knowledge on this motor car adjustment. So how should you approach this question? So there are three scenarios which can happen in case of a motor car question. One is that the employee is owning the car and the expenses are reimbursed by the employer. The employer is owning the car and the expenses are also incurred by the employer. The employer is owning the car and the employee is incurring the expenses. So in all the three cases, if the car is used for official purpose, please note that the perquisite will be not taxed. It is a fully exempt perquisite provided the car is fully owned for official purpose. Now the employee is owning the car and the employer is reimbursing the expenses. Let's assume that the question says that the car is fully used for private purpose of the employee. In that case, how will you treat it? In that case, your perquisite would be equal to whatever is the reimbursement given by your employer. Whatever is the reimbursement you are getting from your employer. Second case is where the car is used partly for private, partly for personal purpose. So partly for official purpose. So the employer is having the responsibility to maintain records. Okay. And that portion of the perquisite, which is reimbursed for private use, will be taxed. Now, the employer is owning the car, the employer is incurring the expenses also. If it is for private use, what is the taxable perquisite? It is the expenses incurred plus 10% of cost of the car. And if it is partly used for official, partly for private purpose, then it will be 8,800 rupees per month or 2,400 rupees per month, depending upon the cubic capacity of the car. And if it is a scenario where the employer is owning the car, the employee is meeting the expenses, and the whole car is used for private purpose, then the taxable perquisite would be 10% of cost of the car. If it is partly used for private purpose, partly for official purpose, then the perquisite would be, or taxable perquisite would be 600 rupees per month or 900 rupees per month, depending upon the cubic capacity of the car. Another important aspect that you have to note in this provision is that the driver allowances. Okay, if the employer is giving you the driver, not the driver allowance, sorry, if the car is given to you with the driver, then the perk for the driver should also be taxed in the hands of the employee, which is 900 per month. So all its provisions or the calculations are applicable if the car is used for private use or partly for official and private use. If it is fully for official use, then there is no question of taxable perquisite computation. So that is all in this video. Hope you will find it useful in your examination preparation. If you want any specific topic to be covered or any specific area that you want to be explained, that you want us to take up in our videos, subsequent videos, then please do mention that in the comment box. We will try our best to include that in our videos in sharing. Now, that's all, and all the best for your preparation.